Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Messer, along with Tim Stanovic. Let's get to some stocks on the move. Bloomberg News cross-asset reporter Emily Graffeo is in the house. DraftKings.
Place your bets.
Place your bets.
Oh, well, yeah. So this stock, DKNG, it's down about 14% right now, 13.5, and their revenue forecast for 2026 missed. They see 6.5 billion to 6.9 billion, but I feel like talk of this stock is reminding a lot of people on Wall Street just how much competition DraftKings, a sports betting company, has from prediction markets.
Right.
So, and I think it was Matt Levine who pointed out a few weeks ago in a column that just the consumer that wants to get involved in making bets, I think he pointed out that you can be 18 on Polymarket and Kalshi and trade stocks.
But you can't
make bets, and you can't with DraftKings. So there's a whole kind of scope of regulatory issues that might make DraftKings more vulnerable to competition. They said, though, they're not seeing a discernible impact from prediction markets on their revenue.
How?
And that they see prediction markets as a massive opportunity for the company. I'm not sure how, though.
Wait, prediction markets are an opportunity
they're
for...
an opportunity, and they're not
Yes.
seeing an effect.
Yes.
I don't understand that.
So DraftKings and also Flutter's FanDuel have launched their own versions of prediction markets products. But again, what we've seen is that the stocks of a lot of these online betting companies
If you can bet on the
recently.
Super Bowl using Robinhood's prediction markets, then why would you use DraftKings or FanDuel?
Yeah, I'm not sure. Again, they're saying it's a massive opportunity. We'll have to see.
at some point, regulaters have to say, well, this is gambling.
Exactly.
Right.
Right?
Yeah.
And so
yeah.
we need to regulate this.
Yeah. Right
something.
now,
I don't know.
these prediction markets are arguably working in somewhat of a regulatory gray area, and they're just taking advantage of it while they can. So,
Yeah.
yeah.
All right, let's go to travel.
Let's travel somewhere.
Nicely
Let's get on
done.
a plane.
You guys are in a very Friday.
I don't know if you know this. It's a 3-day weekend.
Right. Oh, yes. Right. So maybe people
Not
are.
just Friday.
It's a holiday weekend.
Yeah.
Yes.
Yeah.
Okay.
If you're traveling, are you using Expedia, or are you just asking ChatGPT to plan your vacation?
Sometimes you don't even know if you're using an Expedia brand.
Wasn't there someone in the newsroom who just talked about...
Yeah, Paul Sweeney came by and he was like, these LLMs are amazing when it
For
comes to
planning
planning travel. And I
Yeah.
told him, but did it get it right? Like, did it make an itinerary that you actually want to do?
I mean, the street has definitely caught on to that idea that travel agencies, and honestly, this is part of that broader idea that any software company writ large is really at risk here for AI disruption.
That AI scare, right?
Expedia, ticker EXPE, down 5% right now, is down as much as 10%, around the lowest levels since November right now. And this was despite the fact that they had pretty strong earnings very recently. Fourth quarter revenue was the fastest in 3 years. Sales and gross bookings also beat estimates. But if you look at what Wall Street said, Cantor Fitzgerald, they have a neutral rating on the stock. They said, until we gain confidence on Expedia's AI strategy, we're keeping this neutral rating. And BI kind of noted the same thing as well. AI is a long-term risk for the broader online travel industry.
Yeah, there's somewhere this AI scare, I'm not going to take a perspective, but you think about it and you can understand how things are going to change and evolve, and whether or not
You see that play out in the market every day for the past 2 weeks.
Absolutely,
So
right. And it's like a double whammy for Expedia, because it's like travel agencies, but it's also just, software companies more broadly the trade has been very risk off for software right now.
Okay, two decliners.
Now let's go to an
Should we
outperformer.
go to something in the green?
Yes, we'll end on a high note. I'm looking at shares of Applied Materials, AMAT is the ticker. It's up 9% right now, actually a record high. And this is also speaks to an AI trend. They're the largest U.S. supplier of chip making gear, and they had pretty good earnings overall yesterday after the close. Net sales beat, adjusted EPS beat, and they expect revenue of approximately $7.65 billion in the second quarter. The global And also domestic build out of data centers is something that they will benefit from because, again, they're a supplier. So
up 40% this year, and that's after a nearly 60% gain last year.
Yeah. We saw a number of analysts hiking price targets and highlighting the magnitude of that forecast beat that this company had.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.